I'm going to share with you my 2022 trading plan. I am really excited about where 2022 is going to go, and I've already thought of exactly how I'm going to trade it, and I'm going to share it with you. So pay attention. I'm going to go slow. I'm going to explain all the details. You're going to want to really focus on it because you don't have to do what I do, but if you want to learn some things and apply it to your trading, there's going to be some great opportunity here. So let's go ahead and get started. Now, the first thing I want to just mention here is that I think we could possibly 3x our money and only trade an hour a week. How does that sound? Pretty cool. Plus, you'll notice up in the top right corner that it says safe and secure. Really, the most important thing is that you're growing your account safely and securely. Taking a lot of risk just doesn't do anybody any good. All right, so the first thing that we want to talk about on how to get life-changing profits this year is I'm splitting my holdings. I'm going to do 40% stock, 40% crypto, and 10% Forex. Now, this video, I'm only going to talk about the stock. If I get a good response and I get over 200 likes and a lot of comments, then I'll go ahead and explain the crypto and the Forex. But if you guys aren't interested in learning the other stuff, then I'm not going to keep moving forward. But this one stock part alone is going to be off the chart. And so let's talk about the stock trading plan. And it's a little bit in depth, but I'm going to take it slow. Even if you've never traded before, you should be able to nail this. All right, so what I'm going to do is create a simple income generation strategy with a couple bonus profit maximizers. So the first thing that we're going to do, step one, is we're going to choose a high price stock or with growth potential, or a high price stock which is safe and secure. Now, when I say high price, it really depends on how much money you have to invest. So you have to do it based on your amount of money, right? And so what we do is we buy a stock in blocks of 100 shares. And then you sell calls to generate weekly profits on those shares. And my friend Mr. Jeremy Newsom calls this collecting rent on your shares. He was a guest on the How to Trade It podcast a long time ago. He taught me part of this strategy. So it's just like owning real estate. So first I'm going to talk about the strategy, then I'm going to go over the profit maximizers, right? So here we go. I'm going to give you 2 case studies on how this works and how to do it. I'm going to give you step-by-step instructions, and this is what I'm going to be doing all year long. 2022, that's my plan this year. So we're going to buy 100 shares of McDonald's at $268, which costs $26,800. So again, if you don't have $26,000, well, find a stock that you can buy 100 shares of. If you don't have that, well, then just keep saving and investing until you can get it. But you could get a stock around $10, $12 a share, and then it's a lot more affordable to be able to buy 100 shares, possibly around a $10 stock that's only $1,000, right? So then we're going to sell calls weekly to collect an average of $92 a week on this McDonald's, and that would be $4,784, $4,484 right there. And that's pretty good because it's a 17% year gain if you do it every week, year over year. And that is what I call billionaire money. It doesn't seem like a lot, $4,000, but the key is consistency. You do it year in and year out, year in and year out. But I don't know. I like billionaire money, but it's really not a lot. You can't make a living on $4,700. But we're going to scale this. We're going to find some other ways to get some maximizers, okay? So let me show you exactly how it works. So this is the McDonald's chart. You can see the price here is $268, okay? And so we're going to buy 100 shares, and that's $26,800. They're very simple, 100 shares. Okay, so now, once we do that, the next step is pretty easy. You click on the options tab of your broker, and this broker is Webull. I use Webull. It's a great broker. If you want to grab some free stocks and use Webull, just click the link in the description and you can get some free stocks if you open an account. All right, now you click the options tab and it shows McDonald's. So you own 100 shares of McDonald's. And if you click this, this is the sell tab right here, and at 92 cents, you're going to sell it. Okay, and that will give you $92 in cash, and it doesn't cost anything because you own the shares. That's where collecting the rent on the shares. So you get $92, and you can see the expiration here is in 10 days. So if you do this once a week, you can get paid every 7 days. Every 7 days. And so you want to also choose a price that's above the price. And so this expires, this one in 10 days. And it expires if it increases by $3, then you'll have to sell your stock at $272.50. I'll get that. But right now, you just collect the $92, okay? You bought it for $268, and now you can collect $92. And again, if you do that every week, you're collecting a $90 a week paycheck. Not bad, right? Not bad at all. All right, so now, that's McDonald's. Now I want to give you an example of Tesla. Tesla is a big boy stock. Big boy, big girl stock. It's trading right now at $1,093, which means it's going to cost you $109,000. So it's a great stock, but not everyone can do this, right? But if you have the money, it's a great option because you sell a weekly call, you can make $2,090 in 1 week, every week. That's $108,000, 99% gain, which is awesome. So let me show you exactly how it works again. So here's the price of Tesla. I just did this recently, about an hour ago, and you can see here it is, 193. So you buy 100 shares, that's $109,000. Then you'll just click over here on the options tab, right? And again, I said that's Webull. If you want it, you get free stocks by opening an account, and then you can sell the credit here. Now, what I want you to know is you sell a credit for $2,090. That's weekly. If you do that each week, it's $108,000. Not bad for an hour a week. Now, you want to give Tesla a pretty wide spread because it moves a lot. So what that means is here the price is at $1,093. I'm giving it all the way up to $1,070 in 10 days. So I'm giving it wow, I'm giving it like $80 spread, right? And I still get $2,000. The tighter you get, the more money you're going to get, but the ability of getting it called away is is easier. Now I'm going to explain how that works in a minute, but this is how you could easily make $2,000 a week if you own Tesla. Not bad. Only working in. I want to go over a couple options on different things that can happen. If you sell your option at 272.5, which gives you the $90 credit, and price goes up to $275, that means you have to sell those shares at the option price. That's what an option is. An option is to sell your shares at $272. So you have to sell those at $272.50, which means you make $3.50 per share, plus the original $90 credit. So that's $440. So $440 in a week, which is 1.6%, which again is not bad. If you do 1% a week, that's even better than if you just sell the credit where you were making $90. You're making $440 in a week. So actually, if it goes up, that's a really good thing, and you're going to make even more money. Okay, so it's going up and having to sell your shares is a good thing. We want to do that as often as possible. Okay, 1.6% a week is over 50% ROI in the year. Now, you will have $27,240 left, though, because you're selling your shares. You have to reinvest it. What are you going to do? Well, we're going to talk about that in a minute, but let me go next and show you the chart again, just to make sure everybody understands what's going on. So you're selling your option. You get in at 268. Get in at 268, right here. 268, you get in. Okay, you buy at 268. Now you're buying your options, you're selling your calls at 272, which is somewhere in here. Now let's say the price goes up above. Well, you have to sell those shares. You have to sell all 100 shares at 272. Okay. Now if price goes down, well, you don't have to sell your shares, and you get to keep the whole credit, and you get to keep the shares. So if price goes up, you win. If price goes down, you just sell more calls next week. So next week, the price is at 228. Well, you're just going to sell more calls at 250, and you're going to make more money. You're going to make a credit. So in that situation, you make money, it's a win. You lose money, it's a win. So either way, it's a win. Now we're going to go back to, you have the money, you just sold. What are you going to do with it? Well, now you have two options. Option number one is you just buy 100 shares of another stock you like, or you could even buy 100 of McDonald's again. No problem. Or you could sell a put at $270, which would generate you a $194 credit, which is a 0.5% gain. So again, you can do this all in the same day. So if your shares get called away on a Friday, you make the 440, which is the 1.6, the very same day you can sell a weekly put and make another $270, or actually, my mistake, another $194. So that puts your total at $600 a week. So there's a lot of different options and things that you can do. If the price of the stock continues to go up, you can continue to sell puts, making 0.5% a week. You just selling puts all year, you could get 25% ROI if you do it all year. If the price does drop and you purchase the stock, you get a discount and you continue to sell calls on your 100 shares. So let me explain by going to the chart on how a put works. So if you sell a put, if you choose the price of the put at 258, well, you get a credit, and the credit would pay you, and I'll show you on the next slide what that would look like, and you get a credit of whatever it is, and they put it into your account. Now, if the price goes down here, well, then you have to buy the stock at what the price of your put. So you have to buy 100 shares at 258. So you get the McDonald's at 25,000. So you get the credit and you get McDonald's at 25,000, which is a bargain. It's a stock you wanted to buy anyways. As soon as you buy it back at the bargain price, you're going to now sell calls on it. So as soon as you buy those shares back, now you're going to sell those calls and generate the income. Okay, does that make sense? And then if price goes up, you get the stock at 258 and it goes back up to 280 and you're selling calls, well, you're generating credits, and then you just made like $30 a share, right? So you just made $30 a share. You made $3,000 on buying the put, or on buying the shares, and you're getting credits, right? So this is just a rinse and repeat, a cycle that never ends, and you just keep doing this over and over again, and you make 1% here, 1% here, 3% there, 4% there, and you just keep doing this over and over again, and it doesn't take a lot of time because these are weeklies, and it's just an awesome strategy, okay? So now let's go ahead, and this is what the put chain looks like. Again, this is Webull. If you want to get free shares of Webull, just open up a new account. The link is in the description. So take a look. You sell a call here. That's right here. Or sell a put, I mean. That's $188 in your account. If price is below 270, you have to buy the shares at 270. If price is above, you get it. You don't have to buy it. You just keep the credit, right? So that's how puts work. Very simple. You could even buy puts up here, and it's a very simple strategy on how it works. Okay, now from there I want to talk about how to lose money, because there is a way to lose money in this, but this is what you don't want to do. Okay, scenario: if you continue to buy McDonald's and you get the credits, and you do it over 6 weeks, and the price never goes above 268. Actually, every week it drops. Price goes down, you're collecting the credit, everything's good, everything's good. Price keeps dropping, keeps dropping, keeps dropping. Well, now after 6 weeks, the price is at $220. $220, okay? Well, you sold a call at $225, and so, or at $220. You sold a call at $220. Well, what does that mean? Well, that means now you have to sell those shares at $220, but remember you bought them at $268. So that's like a $40 a share loss. You don't want to do that, right? That's a $4,000 loss, 15%. You don't want to do that. Now, a couple things about it though. It's still only 15%. And so if you've been selling options all year and you've been making money and you've been selling your shares at a profit and you might be up like 70%, well, taking a 15% loss isn't a big deal, okay? So there could be a time when this happens. You don't want to get worked up over it, but you just want to be aware that this is really the only way to lose money on this strategy. But the idea is that you're going to make so much money in between your losses that it's not going to really matter. And there's also a way to avoid the losses. So you want to pay attention to this. If you buy the shares, and this is just a picture of how it works. If you're selling call, and the price gets down to 200, you keep selling calls all the way down. You know, you got 6 sells. It's over a period of 6 weeks, and you make a lot of money. You make $500 or whatever, and then price bounces up above, and then you'd have to sell those shares, right? You sell them. And that's where you take the loss because you got your original buy up here, right? So if you sell down here, you're losing. Okay, well, the way to avoid this is to just close your call, and I'm going to show you how that works. So again, this is if your stock goes down, you could actually lose a total of $4,000. But if you buy back the call, you don't have to actually sell your shares. So let me show you how that works. So if you right here, let's just say you sell a call and you make $69 in credit. $69. That's what your credit is. Okay? Well, the price goes up now. The price of the stock goes up, and you're gonna have to buy those calls back, right? And the price of the option now goes from 69 to 192. Okay? So you actually have to now buy that back. So you're gonna have to buy a call for 192, which remember your credit was $70, so it's 192 minus 122, which is way better. You take a $122 loss just because buying that call back, which is way better than the $4,000 loss. So if you're in a situation where you have to buy your shares back and exercise, that's called exercising your option, well, that's a $4,000 loss, but if you just take the call loss, it's much better. $122 versus $4,000 is huge. Now, if the stock is above your original purchase price, then you want to just let them get called away, according to my strategy, right? That's it. Okay, so hopefully that makes sense. If you don't understand something, please leave a comment and I'll answer all the questions. So now I want to talk about profit maximizers, and this is going to be huge. And I actually did this a lot, and you guys, so every time you sell calls, you buy more shares of the underlying stock. So in the McDonald's scenario, you'd make $90 a week, right? And that means you're going to be able to buy over a share a month, like every 3 weeks, right? 3 weeks. So some months you might buy one, then one, and then some months you might get 2. So in 100 months, you're going to be able to sell 2 calls because why? Because you're going to be able to buy 100 more shares. In 100 months, actually in this case it's going to be about 80 months, you're going to be able to double your cash flow. So instead of making 90 a week, you're making 180 a week. You just got a big old fat weekly pay raise. I mean, in your job that you're working, do you double your pay? You might once, but you're not going to do it twice. You're not going to do it 3 times. If you start in at $10 an hour, you might double up to 20, but that's going to take you years. And then you're going to go from 20 to 40, not likely. Your whole career you won't do that. So you're going to be able to do this in a couple years, right? Plus with our other profit maximizers, you're going to be able to do it even faster. So it seems like slow growth, but it's going to be consistent, and it sure beats anything else you could do. So plus, if the price of the stock goes up, you could get massive gains there. If we look at the McDonald's chart, McDonald's has gone up every single year. So you're going to be making money on your stock increases. And so that's another way you're going to be able to get this. More than likely, you're going to get your double much faster than 100 months. Much faster. Plus, McDonald's pays $552 in dividends. And so you add that, that's another 2 shares a year. Right, another 2 shares a year because of the dividends per share, right? So this is a great profit maximizer. As you continue to increase your cash flow, you're doing this week in and week out. Really good stuff. Now, this is the big boy profit bonus maximizer, and this is really huge, and I'm going to be posting some of these on the channel, so be on the lookout. These are weekly options calls. Right? And so what you're going to do is you're going to take your earnings from the credits and you're going to buy calls for high growth stocks. And every week I use my Calm Cash strategy. If you want to get access to that link or the strategy, I do call alerts, and I also have training. Just check that in the description. But here's the thing. every week you look and you're going to analyze your gains. And so if I made, in 2 weeks, I made $200, right? And that money's just going to sit in my account. So what am I going to do with it? Instead of buying more shares, I could buy options. And this is a massive profit potential with zero risk. Because why? Because this 200 is free money. Remember, you sold the calls here. This is free money. It's not, you didn't put this money in your account. So there really is no risk if you lose money. Now, the thing about an option, if you buy a call, it could go to zero. So you could put that 200 in and it could go to zero. But it could also go ballistic and make some huge gains. So the potential on this is big because you can get some big winners. So real life example, I purchased a March Tesla call with a strike price of $1,525. And I bought that call for $1.67. Okay. And I recently did this, and it cost me a total of $167 for that one call. Now, I sold that one call a little over a month later for $60, which is $6,000. Okay, that's a terrible looking $6,000, but I bought $6,000. That's a $3,495 gain in 1 month. Okay, so this is a big bonus profit maximizer, a huge bonus profit maximizer. Okay, and so you could actually take some of your money and sell those calls. There's really no risk, and there's a huge potential. Let me show you what it actually looked like so you can see that I did it. Okay, so I entered right here, which I don't know if you can see, that was September 24th, right here. And I did it on this breakout. I like to trade breakouts. See how that broke out of there? Okay, so you see how that broke out? So I bought the calls right there, right? And I never was underwater, not even 1 minute. And I just kept holding, and I got out right there. And usually I like to get out when the price drops below this 9 EMA, but at this point it was $6,000, and I'm like, this is just literally insane. I got to take this money. So I got out, and remember, I paid $167. I sold it for $6 grand. The total profit was $5,038 for a total return on investment of 3,495% with zero risk. Okay, and here's the actual calls on my statement so you guys can see. Tesla March call buy right here, 9/24, and then I sold it on November 11th. So you can see that is the actual statement on my Webull dashboard. I bought one call for $167 and I sold it for $6,050 or $5 or whatever that is. So that is really awesome. A great bonus maximizer. I hope that this video was really helpful to you. I hope that you learned something. And this is my 2022 trading plan. I'm very excited about that. I'm going to do this all week long. And if you guys want video updates on how it goes, let me know. If you want to see my crypto trading plan for the year, or if you want to see my Forex trading plan for the year, leave a like. Let me know in the comments. Subscribe to the channel. I'm going to be updating as time goes on. But have a great year, whatever you're doing, however you trade. I'm really thankful for everyone that's on my channel, and I'm here for you. The reason I do this is to educate and to teach and to train, and if you guys need anything at all, have any comments, please let me know. All right, thank you, and let's crush it 2022.